Hey, everybody. What is going on? Look at all of you. Hi, Denise. Denise is wearing her Red Riding jacket today. Who else do we have on the call? I know Lewis. I think Lewis, you're driving at the same time. Hey, gang, when you come in on these calls, you know what I really appreciate? Some of you, hey, Mark, some of you will turn on your cameras. Now, here's what I found. As a presenter, as a guy who's sitting on the other side, I'm a guy that likes to work a room. I like to shake hands and kiss babies and, have fun. And in Zoom, it's kind of difficult. So when you turn on your camera, unless your beauty is going to astound me and trip me up, or you're doing something that you really don't want us to see, it would be awesome if you could just turn on your camera. It helps me, and I know it helps us as presenters just show up and see people that are there in real time. So Denise, Mark, I really appreciate your cameras being on. Hi, Keith, coming to us all the way from Calgary. Vince is in the house. Maureen, how you doing? Amin is there. Victor Wang, good to see you, my friend. We met a few weeks ago. Ulaga Nathan is there. JD, my man. It's great to see everybody coming in. And if you are joining us, welcome to the Real Estate Wealth Lab call. We have got some stuff going on for us today. We have been talking a lot about artificial intelligence, and everybody talks about it, but how do you engage with it? How do you leverage it for real estate? We have with us our partners from Confidus, and they're here to present to you and to myself, how do we actually use the interface called AIR? So a couple things, just before we get the previous slide, please, Ken. On the a couple things that we're going to do today. In the next hour that we're going to spend together, I'm going to do my very best to honor your time. So we're going to spend 5 minutes in quick introduction. We're going to talk quickly about what is there and why that's important. Then we're going to have a live demonstration of AIR. I know that we got lots of feedback. People love what we've got, but one of the feedback things we got was that we weren't showing a live demo. And when we sent you to a 3-day trial, people were getting lost. So here we are. We apologize. We own it. We're here, and we're going to give you a live demonstration of AIR. Then at the same time, if you are in the real estate space, you know that there's a lot of noise about mortgages, interest rates. Are we going into a recession? What's going on? So we have Gary from 812 Mortgages who will be talking to us about how they can position you as an investor to get the best financing possible as an investor. How to deal with in the current market. Then at the end, we're going to open up the room for 10 minutes for any questions you might have, a panel discussion. Does that make sense? If it does, give me a thumbs up. Good, thank you. Perfect. So, Ken, why don't you come into the call here? Ken is our Chief Operations Officer, and Ken does everything that happens in REWL. He's the dude that gets stuff working. We all show up and he just makes it seamless. We've also got John, who is the president of Confidus. Now, he is not with us today due to a family event that he's got going on. Good thing, not a bad thing, a good thing. But that's his story to tell. So he can tell you what's going on another time. But instead, we've got now, I hope John does not listen to this recording, because I think we've actually got a better person instead of John. We've got the dude that actually writes the code for this stuff. So the Skynet designer, the guy who actually writes code, Shayla is with us, and we've got Gary, and I'll introduce Gary in a minute. Ken, do you want to come in and introduce our team?
Yeah, absolutely. Thanks for having me. Guys, if you don't know me, I'm Ken Klenopdakis, the Chief Operating Officer of the Real Estate Wealth Lab. And listen, we're here to provide some immense value. So if you don't know us, get to know us, follow us on Instagram, whatever you got to do, look us up. But I want to get here. I want to be of service to everybody. And I want to make sure you get what you came for tonight. So we got a jam-packed night. I want to get through it. Visit the site if you want to know more about us, but I want to get right straight to it. Is that okay, everybody? Thumbs up? Maximize your time. Excellent.
We good.
So today with us, listen, the Chief Investment Officer of Confidence Brokerage is here. Okay, this is the guy that actually is the guy that underwrites a lot of the deals that his company bids on, okay, in real time. So I'll let him introduce himself. Gary from last week is back again. We're going to touch a deeper dive into, how to actually finance a lot of these deals into the market. All right, legal disclaimer stuff, guys, we all know how it is, right? If you need advice, we got to talk to the professionals, okay? Get in touch with us and we'll help you out. Pretty straightforward stuff. Chat rules, ask questions, say hi, engage with us, okay? Share some feedback, thoughts, ideas. Be respectful and courteous in the chat room, okay? And all we just ask is don't solicit and don't sell in the chat room. Cool, thumbs up. Excellent stuff. Thanks, guys. I'm just quickly going to go through some events that were coming up. If you haven't met us in person already, come out to the barbecue. October 19th is free to all members, including every tier that we have and trial members. So for those of you that want to come out and shake a hand, come out and have some Oktoberfest with us. It's going to be a good one. It's local here in Toronto.
Ken, I'm just going to interrupt here just for a second.
Yeah.
By the way, Nito is coming to us from Ottawa. He just threw it in the chat. So if you are from, I'm in Erin. I don't know whether you know Erin or not. It's north of Georgetown, outside of GTA. But I know we got a lot of people from Toronto. Throw it in the chat where you're from. One of the things, Ken, that I've found about our little community is that we are all investors. Primarily, we are all investors. Each of us on our team, we invest in real time in real estate. And because of that, we're having a lot of the struggles that every other investor is having, and we're finding solutions. So one of the things I like about our community, and especially even the community barbecue and the things that we do, is that there's such synergy because we're all investors. And it's a great place to hang out. So if you have not been out to one of our live events where you get to come and hang out with us, you need to do that. Ken, back to you, buddy.
Thanks, buddy. Yeah, and if you want to sign up, just go to realestatewealthlab.com/events. Pretty straightforward. All right.
Hold on a second. Ken, hold on. Can you take a picture of that? If you are watching this right now, take a screenshot of it, because I'm expecting an email from each of you at info@realestatewealthlab. Okay.
All right. Okay, guys, I'm just going to dive right in. Like I said, we got a lot to cover, so we got to get moving. So for those of you just joining the call, please watch the recording. You'll get access to it. We'll make sure you guys get a link either via text or email, and we'll touch on that in a minute. Okay, so I'm just going to quickly cover what is AIR again, how does it work, all that really quickly for those of you that know what it is and all that. For those of you who don't, I'm just going to run through it quickly again. So what is it? We're calling it AIR. It's an artificial investment realtor. It's just like realtor.ca or .com. All single-family properties in the MLS have been pre-analyzed for rental, investment, or yield opportunity. This is something a real estate investment-focused realtor would do. So not just buying and selling, but an actual realtor should be doing this kind of work, presenting you with opportunities. So far, so good. Does that explain it nice and easy? Good stuff. Now, why everybody's going to use this thing is pretty simple, okay? We've all been out there looking for stones to skip. You don't have to do that no more. AIR is going to give you the stones to compare the best ones to start to skip. That's really how this thing's going to work for you. So you're not looking for the flattest rock anymore. You're actually just going to compare which is the best flat rock to throw out there. And what I mean by that is which one you're going to buy. That's why everybody's going to use it. How it works, guys, really quickly, okay, you have the actual AI system. It's fed a bunch of data, okay? It's got retail sales, it's got sold comparables, it's got third-party surveys, all that data. It's got default data that goes inside of it. At the top there, you'll see it there. Okay, what it does is starts to compartmentalize the data, takes out the duplicates. It really starts to do all the calculations and all the metrics. It does predictions 1 year. Again, we can go into it and do a deeper dive another time, but we have tutorials and all that. But just know that the data is being fed in through the top. It's doing some stuff in the middle, running all your numbers, doing all the calculations. And then it kicks it out in nice formats. You've got a heat map. You've got single property analysis by every property on the MLS, making sure that there's data on it. Then there's also ChatGPT. That's the prompt is also embedded in there. And then those three combined will kick out what's called a due diligence report. And we'll get into that more later. So far, so good? Excellent. Good. How this works, guys. So REWL's partnered with Confidence. Confidence is a real estate brokerage. Okay. They're based out of Toronto. The Real Estate Wealth Lab provides the education, coaching, mentorship, support, analysis, verification, and the collaboration in the platform to help users use it as well as transact using the platform. Confidence is an actual realty brokerage. Okay. They're providing all the MLS data, the AI, the property purchase, transaction services, similar to like a real estate brokerage would do. Is that clear? We're good? Excellent. I want to get right into the demo, guys. I'm speeding through this, so I'm sorry if I'm talking too fast, but you'll get the recording if you want these slides, and you'll get the copy of the presentation, so not to worry. So if you want to get access to AIR, you want to follow along, you want to join the membership, this is what we got. All right, we've got two ways. Most of you on this call are likely to do it yourselfer, someone like me, a tire kicker that wants to make sure that this is all good and test it out. If you want to try it out, you can actually do that for free. Go to realestatewealthlab.com/AIR. You can learn more about it there, watch the tutorials. You get limited access to AIR. It's embedded on the page itself. So you can use the maps, the layers, all that for free. If you're an action taker, which I turned it to be after kicking tires, then now you can go to realestatewealthlab.com/trial. You sign up for a full membership with us. You get 3 days of access to AIR, unlimited access to AIR, where you can actually find deals and you might be able to transact on one, find one, take it to your realtor, whatever you got to do with it, but you actually get access to it to play around with it and watch the analysis. You get a free DDR as well. After the trial is over, it's $99 a month. Plus it includes coaching, playbooks, courseware, and a plethora of other stuff. And then what I recommend you do is book a call with a REWL advisor. It's absolutely free. We'll help you get onboarded, get access, answer your questions, show you how to use it that's beneficial to you. All good? Clear as day? All right. And again, this is us. This is our team that'll help you get in access to AIR and get what you need done, depending on what strategy you have going on. All right, let's get into the demo. Niran, do you want to just bring in Shale and
sure.
Run
Now,
this?
word on the street is that Shale is the investment guru of residential real estate. This guy knows his stuff. I've sat down with him, I've chatted with him. He knows his stuff. Shale, come on in. I'm really excited. Now, my understanding from you, Shale, is that we're going to do this in real time. You're going to show us the interface, and you're actually going to choose a few different properties and show us what approach you could take on each of these properties. Am I correct on that?
Yeah, you got it. Thank you for the kind words. Very quick introduction on myself. I spent the last 14 years in the institutional asset management space with a focus on real estate, and within that, a focus on residential real estate. First 10 years of my career was with Canada's leading hedge fund that was exclusively real estate focused, and I was lucky enough to join them at their nascency, managing less than $20 million of assets, and help grow that to a $1 billion firm. And my most exciting component within that tenure was being involved with the emergence of single family rental as an institutional asset class in the US. And leaving that firm about 5 years ago and being really excited to be part of the Confidence team now, a big part of that for me was bringing what I had seen from an institutional analyst and portfolio manager perspective in the US to Canada. And I'm usually the one behind the scenes, crunching the numbers, running the spreadsheet. So it's really a pleasure for me to be able to take this evening to work directly with our members and spend this time with you, and hopefully be able to bring an institutional perspective to investment analysis and underwriting, which is very much focused on technology and data supported analysis. And that's really the key for us in the system, is utilizing data efficiently to find the best investment opportunities and understanding that there are a variety of different investment strategies. So having a tool like AIR that is agnostic and can be differentiated based off of your specific investment criteria, mandate, risk tolerance, etc. So very exciting. And unless there's anything specific, I could jump right into the demo.
Let's go.
Let's do it. So for those that haven't had an opportunity to play around with the tech today, hopefully you can all see it on the screen here. I'm going to give a quick roadmap to the tools that are available and then give real examples. We're going to walk through 3 examples, one for 3 different investment strategies, and then finding a property in real time specific to that investment strategy and walking you through how you can use this tool in a self-serve function to ultimately find something that you think could have potential and be interesting from an investment perspective, utilizing these tools to ultimately reach out to your coach to support you through the next steps beyond this. So in terms of what is available to us here, we're really focused today on the Ontario market. We have the ability to assess multiple types of properties. Today, we're going to be focused exclusively on detached homes. And we have this heat mapping system that has a variety of layers. So here we have, for example, the price change of homes over a 30-day period, over a 90-day period. We look at property demand. So in my previous career, this was the most important metric of understanding new sales to listing ratio, which is the most direct form of supply and demand fundamentals. How many offerings of new sales do you have compared to an actual transaction, which is a buyer choosing to acquire a home? Today, we can see there's a lot of green here. There's a buyer's market, which means that the sales to new listing ratio is below 40%. We also have rental data. That's one of the big. Yes, go ahead, please.
Question for you. When we're seeing the green here, how do we know what that green means? Where's the legend for that in your map?
Yeah, so here we have the legend here. This is an example where we have a lot of green. If I can use a different example of gross yield, which is simply the gross rent achievable in a property divided by its purchase price. Here we can see a little bit more distinctly an area like Peterborough in red is closer to a 6% yield. Well, not unexpectedly, areas closer to the downtown of Toronto would be the lower end of the range, around 3% gross yield.
Got it.
So
Thank you.
beyond these layers, we also have a variety of filters that allow you to create criteria for which listings you want to be looking at. So we have price filters. We can look at all properties that are actively for sale or properties that have been for sale for certain periods of time. And we can also sort and filter based off criteria: beds, bath, parking, number of kitchens, and days on market. Those are the primary tools. The team at Confidence, including myself and my associate, also pre-populate properties that we've done assessment on beyond just the passive data and technology within a variety of strategies. So here we have buy, renovate, refinance, repeat. We have a fix and flip strategy we've been populating for buy and hold, conversion, etc. But we're going to take it a step further and go through it with you in detail today. That's a roadmap of how the technology works and how you can self-serve. And I can jump right into a specific example. Let's do it. So the first investment strategy we're going to focus on is one that's very popular today. There's been a lot of changes in terms of the Ontario provincial legislature that's trying to support additional homes being developed. There were rules around 3 units as of right for all properties. Townships and municipalities within Ontario are taking further steps. And this is creating really interesting investment opportunities to acquire existing homes that have the opportunity for conversion or to add ADUs, additional dwelling units. And that's what we're going to look at here today. So we're going to start very high level. Here we already have selected gross yield. We can see areas like Niagara Falls and St. Catherine and Peterborough are very high gross yielding areas relative to the rest of these markets. We're also going to look at price change As an example, a lot of areas that are seeing declining prices, but there are pockets that are still seeing strong demand, such as Peterborough. And then a really great example of looking beyond the headlines into the data is understanding things like upside rent potential. So it's easy to see a headline of what the average rent is or the average transaction price of a home, but understanding the data set within that, what are areas where there's positive skew or the ability to get better than the average for those that put in the effort in certain regions. And we can see here, as an example, if we look at gross yield and if we look at upside rental potential, there's some really interesting opportunities within that. If we just start with gross yield, maximizing the most for your dollar in terms of your income, we think Peterborough is a really interesting submarket. And when we're looking at a home that we can ultimately add units, or a home that hasn't already been touched by an investor, we're going to go to filters, and we're going to look at a simple example of a 3-bedroom. So I'm going to set the min and max to 3, and a 1-bathroom home here. I'm going to sort by positive cash flow, and to maximize the upside, we also want to look for homes that are lower purchase price. Generally. So here we're going to set the max at a $500,000 purchase price to see what comes from this. And there's a property that we think is quite interesting here on Maxwell Avenue. So right from this, the 7 properties that fit within this, within Peterborough, I'm going to click into Maxwell, and right away I get the opportunity presented in front of us for this home. And what I always do is start with the description to make sure I know what I'm looking at. So here, to confirming, it's a 3-bed, 1-bath. It's a brick bungalow. It's actually a split home. And there's 2 entrances for this home, which is very helpful when we're talking about a conversion or an ADU strategy. And I'm going to look at the dimensions of the lot as well. So we have a very wide 51-foot and relatively deep 116-foot lot. And then I'm going to start to look through the pictures. So here you can very clearly see the split bungalow, the basement unit having a fair bit of window access, definitely supporting rents. You can see here the availability of the backyard, and a big thing that we look for when we're looking at backyard units, coach houses, are there trees in place that there could be issues removing those? If I go back here, I can also see there's a side entrance which supports the additional unit within the home. And as I'm looking through the listings here, I can see that a facelift could certainly support getting better rents, very much livable, rentable as is, but the opportunity to create that value. And here you see in the basement in particular, really there's the opportunity for upside in converting what is there today into something that's more desirable for active rent or for active resale here. So what I can do live in the system and what you can do at home and play around with is actually build your budget within this. So we've run the numbers behind the scenes. We've assessed that this could be the main home having 2 units. And we believe that the ability to put an ADU in the backyard could garner rents of about $2,400 for the upper and the main, $1,900 for the lower, and $2,400 in the ADU. So the gross monthly rent in combination, we believe, is about $6,700. And that would require an additional investment in our assessment of about $400,000. The backyard ADU being about $225,000, and the construction of the main floor and remodeling the basement at about $175,000. So here I can input in real time the capital investment, or CapEx as it's known. I can update this here for the $6,700. And then we see the positive cash flow check that we all want to see. We can see a going in cap rate of just under 8%. And we also have the ability, and then I'm going to pause for a moment and let Gary do his thing, where we can jump into the investment calculator and start running mortgage assumptions or other operating expense assumptions that might be specific to your situation.
You're on mute, Niran.
Sorry, I'm talking away here. And so this is crazy that you can actually do all this, and we have access to all of this. You know, when I first came to Canada, or when I immigrated to Canada, we ended up in Peterborough, and that basement reminded me of the basement of the house we rented. So go figure. Why don't we now, if we were going to do something like this, Gary, let me bring you into the conversation, because I'm looking at those numbers and I'm going, well, how am I going to find the money to do this? And I've already got properties under my belt. What does the financing climate look like in this specific property? And I understand, Gary, that that every investor is different.
Yeah, that's a great question, Niran. So, you know,
sorry, I just want to mention, Gary, before we get in there, why don't you just say a little bit about yourself? I know you're the CEO and broker of 812, but give us a 30-second picture into your life.
Sure, with pleasure. So I've been in the mortgage industry for close to a decade now. My background's from Wall Street, and you know, I built a national brokerage that pretty much services every type of mortgage product that exists across the entire country and across the entire mortgage spectrum. You know, I've personally processed over $1.5 billion worth of mortgages. And, you know, what we really focus on is unlocking opportunities for investors like the ones that are here today, you know, on this call. You know, there's a lot of people that are in the mortgage space and very good at what they do, but, you know, we take the experience and our own technology and like Confidus, we layer that in to see what the best opportunities are to increase your buying power and you know, use that buying power to either, you know, do the BRRRR transaction, do the fix and flips, which, you know, Shale's going to talk about. So Shale's the guru of finding you the opportunities. I'm the guy that's going to make sure you have the money.
Awesome. Let's go.
Yeah.
How to find me the money?
Yeah, for sure. So Niran, you know, this is a great question. This is a great example. I mean, obviously from the numbers here and from what, you know, the platform showing you, this could be, you know, incredible positive cash flow. There's a lot of things that go into structuring a mortgage. And I think the challenge that, you know, new or newer, or even some, you know, short-term investors have is, you know, they're always going to the bank first because we're conditioned to go to the bank. Banks have very limited product offerings, right? They're very stringent in their credit criteria, their income criteria, and you may not realize that you could buy something like this, right? You may have walked into a bank and said, hey, I want to buy a property like this, and they would have said, hey, sorry, can't help you. You just don't qualify. So several things that we have to look at is, you know, the nature of your income, how you report your income. More importantly, for a deal like this, a lot of people make the mistake of buying the property first and then, you know, taking a 5-year mortgage and then realizing they need more money to do the, you know, the renovations or the additions, right? What we really look at is the full picture, right? So not just purchasing the property, but will you have the proper financing in place to do the renos? Because the renos is where you unlock that additional cash flow, and it's quite substantial cash flow. So in a situation like this, you know, we may do what we refer to as construction or renovation financing, right? Because you're making a fundamental change to the actual foundation of the property by adding the addition. And, you know, traditional bank or bank type lenders will not do that kind of deal for you. They will only lend against the property if it's usually 100% complete. So we may do a short-term construction deal, right? Have a proper work in place budget, you know, make sure that renovation and construction is being done properly, and then refinance the deal, you know, with, you know, a prime lender at the best rates in the market so that you can achieve that cash flow. The biggest mistake a newer investor will make is they'll jump into the property and then they'll go start looking for the money to do the renovation, and that might hamstring them. It might cost them substantially more because they would have to break their mortgage that they just locked into. So this is where we really look at the cost of capital and the, you know, the best ROI on the investment for using that capital to build this real estate portfolio.
Gary, that is so good, because that mistake of financing is a mistake that I keep running up into when I'm dealing with new investors. I'll tell you, new investors, they tend to sit on the sidelines sometimes too long. And then when they jump in a scenario like this, I see mistakes being made in three different areas. One is in buying the wrong property. Once you bought it, it's yours, baby. You've bought all the upside and the downside of it. Two is not setting up and structuring the financing correctly. And halfway through the reno, you're out of funds. And it can be very expensive solution at that point. And three, when you're doing this type of construction, not partnering up or having somebody in your corner that can actually walk you through the construction process, because renovating and constructing a property is not something that is easy to do. Contrary to HGTV's 30-minute special, there's a lot of other things that go wrong with it. So those are the three areas. And I think that if you are here listening to us, either the recording or you're live with us right now, I can tell you that we can help you find the right property. We can get you financed, and we can hold your hand through the construction phase. Gary, back to you, buddy.
Yeah, no, it's great. I mean, I love Nito's comment here in the comment section. Just show me the money, right? So that's actually some of the biggest mistakes that investors make, especially with renovations, is they start the project thinking they have the answers, and then they get stuck in the middle, right? And they're calling saying, hey, I need more money, but now they're limited in their options. And the options that they do have, if any, are, dramatically more expensive, which then impacts, your ROI, right?
Right.
And number two is going over budget. And that's another big mistake you make. And when you structure a finance deal properly from the beginning, you're there to, put guardrails around the investors to make sure that the job gets done properly and to budget, so it avoids, financial slowdown, or in some cases, actually losing the property because you don't have the funds to continue. So again, a lot of great tools here to find these diamonds in a rough. And then, you got to make sure that the financing matches the investment objective. And that's where, we use our own data and our own AI to really find and unlock those opportunities to structure it properly so that it leads to that successful outcome and a happy investor.
Perfect. Thank you, Gary. Now, I have a question, and I'm probably going to throw the ball back at Shale here. Shale, instead of a BRRRR approach, I know there are people in our room today who are looking for fix and flip. What would that look like? Can you actually find us a property to fix and flip, if it exists?
Let's do it. And I loved your HGTV 30-minute special. So we're going to go old school with the original fix and flip strategy, which I'm going to come back here and reset the filters. And as that's working, for those that aren't familiar with the fix and flip strategy, in its most simple form, we're looking for the ugly duckling. We're looking for the cheapest priced house on a nice street that we can buy, put love into, and resell and make a profit, and not have our cash exposed for a significant period of time, not continue as part of the rental cycle, but churn our investment capital and really drive that value added strategy. So when we're looking at, from a high level, from a macro perspective first, which type of areas should we be looking at? We are, for an example, going to start with the price trend over the last 90 days. And we see a lot of red here, and we're actually going to pick on Hamilton as an example that's had declining prices over the last 90 days. But over the last 30 days, we're starting to see a slowdown in those prices and actually more of a neutral change in prices. And that's an area that might start to be of interest. So as we zoom into Hamilton, for a fix and flip strategy, we really want to find a home that's at a lower price point, that has not been renovated, where we can do all the value add and we can get the value for that efforts ourselves. So we're going to look at very low priced homes to start our filter. We're going to look at a $400,000 home, and we see a note here where there's 4 homes that fit within that profile near a park in this area. And before we dive into the same home listed here twice, we want to see if the work being done can garner that upside in a fix and flip. And we want to know, are there higher valued homes within this area? So we're going to come back to our price budget here. We are going to pop our max to no max, and we're going to look to see, if we put the effort in, can we double the value of the home? And we can very clearly see here within this node, there are $800,000-$900,000, almost $1 million homes within this area. Not cash flowing, but that gives us the idea of what a home can be worth that has that love and that effort put into it. So we're going to flip back.
Real quick, don't forget where you are. I want to ask about that cash flow icon right there. So what is that pertaining to, and what are its defaults that it's actually, turning green, yellow, and red to indicate positive?
Yeah, absolutely. So this cash flow icon, which changes as variables change, as Gary astutely pointed out, everybody has different mortgage assumptions, requirements, inputs. So we've assumed here 30% down payment or 70% financing on, I believe it's a 25-year amortizing loan, and that will output whether or not that property is cash flowing. This is a bit of a cheat sheet. There's a lot more detail that goes into this if you go into the investment calculator and look into detail and play around with assumptions that fit within your specific criteria. We have the benefit of having looked at this home previously, listed at $400,000, been on the market for 5 days, having taken a look at other homes within the area over $800,000. It gives us that comfort that there's the potential for fix and flip upside or development upside here. And if we look through the pictures, we can start to see it's a great residential area backing onto a park, but the outside and the inside of the home has certainly been unloved for an extended period of time and needs substantial work. And that's really where the upside can come in. A lot of gutting that has to be done here. So we've run the assessment independently, and we think for a budget of $100,000 to $150,000, this can be very much an updated property that could garner north of $650,000, $700,000 on the upside. So you have that development margin or that profit potential in a property like this.
That is awesome. And I know Hamilton. I have a number of properties in Hamilton. How do you come up with, going back to your comparables, Shale, about 800,000, is the $800,000 house different from this, or is it look like this house? Because I know in that area there's different types of houses. How would I do that?
Yeah, that's something that we can do. The coaches and us on the back end perform in detail. So we're looking at square footage, we're looking at beds and baths, we're looking at the quality of finishes to assess what that property will be worth after the capital investment goes in. The 800,000, this example, is a good benchmark for us to use as a bit of a rule of thumb to ensure that it makes sense to spend the time trying to assess the property. And to get those ultimate outputs, there's this big request report button right here. And I know that the coaches are eager to start to support their clients in looking at these opportunities. And we didn't do it for the last example, but I believe that we'll be following up with these DDRs or due diligence reports after this call. And this is where there's substantially more information that's provided. So this is the previous home we looked at in Peterborough. And this gives you a much more detailed financial analysis of the property. This can be tailored specific to your sources of funding. We have sensitivity tables that are available. And we also go into not only the rental comps, so the previous $6,700 a month that I mentioned, the actual data underlying that, the examples of comparable rental transactions in the area mapped, the ability to actually click through some of these to see what those homes look like. But also, further to your question, are the resale comps. So we will populate what the resale price comparison is of this listing, of various comparable listings, and giving specific examples within a very close geographic scope.
So that, I know as an investor, for me to find all that information at the level that you're providing, it takes days and having the right connections and a lot of digging. You're doing all this for us. And gang, one of the things I want to just put I don't want to step over it. Shale, you and your company, you're providing us with 3 DDR reports here. Those are real, they are time consuming, they're expensive because they take time to do and to provide. And you're providing that on 3 properties for all of our guests here today. Is that correct, Shale?
That's right.
Thank you very much. I don't want to step over that. Now, Gary, all right, I'm going to put in, I know people in this room, Zoom room right now, who are itching to put in an offer on that property. I know them. They're partners of mine. So they're here. The question I have is, okay, I want to buy this, but how am I going to finance this deal?
Yeah. So, Niran, I mean, look, we're taking the lens of, that the investor needs financing to make it work, right? If you have unlimited capital, great for you, but we're going to take the more general approach that I need to finance the property to capitalize on the potential profit for this fix and flip. And I think if you ask the average investor, what's the most important variable when it comes to financing, you probably agree with me, they're all going to say the rate, right? Everybody wants the best rate. Well, I will tell you that the most important variable in a fix and flip is the time that it's going to take you from purchase to sale, right? And the reason I say that is, general rule of thumb is about 7-8 months. And what I mean by that is, if you can get this done and on the market and sold in about 7 or 8 months, which I think could be really realistic, you may take a type of financing which we refer to as a private mortgage that may be 9, 10, 11%, and you may be like, wow, that's a lot of money, but the cost of that capital for the short term would be cheaper than taking a traditional 1-year term, with a lender and then paying a break fee to get out 5-6 months early, right? So this is where, again, we sit down, we kind of discuss with the investment coach and the client, how long do you think you can complete this project by? And then we bring in the capital that makes the most sense from a cost perspective, less about the rate. So time is more important than the actual rate itself to figure out your best return on your money.
Perfect. Thank you, Gary. All right. I think, Shale, you have one more property for us to look at. Is that correct?
That's right. Let's look at Let's look at the third investment strategy that we're going to be highlighting today. So, quick summary of what we've looked at already. We've looked at a conversion, which is a large undertaking. You're redeveloping, you're adding a unit. We've also looked at a fix and flip, which is a relatively short-term investment strategy. But what about those that want to buy a property for the long term, but also add a little bit of value, not just act passively, but be involved in that wealth creation? And that's where the BRRRR strategy comes into place. Buy, renovate, rent, refinance, repeat. So we're going to start like we have previously, looking at the various filters that we have. We're going to start with gross yield. We have the reminder here of Peterborough being a very high gross yielding area, but we also see an interesting highlight in St. Catharines and Niagara region. And we're going to actually look at St. Catharines today. So that's the gross yield. We're also going to look at the rent change. And here we see in St. Catharines, we are in an increasing rental rate environment, which is bolstered by strong supply and demand fundamentals. So we're going to start to dive into actually find a property. We want to look for something that's relatively low priced. We're going to start with a maximum purchase price of $500,000. We are going to sort here. We have it sorted. We're going to sort by this positive cash flow. And there's a property here that we've assessed and we think is quite interesting at 38 Chaplin Avenue. And we're going to start by reading the description to ensure this property fits within what we're looking for. Calling all investors. That's a good sign. Legal duplex. So there's some nuances, understanding conforming versus non-conforming, illegal versus legal. Our preference is always to find a legal duplex and mitigate the opportunity for headaches down the road. And we can start to review the details of the strategy here and start to also look at the pictures. So we can very clearly see you have two separate entrances for the main floor and the upstairs. So we have a legal duplex here, solid backyard. And as we get into the inside, we see it doesn't need a full gut like the previous homes we looked at, but there's the opportunity for a facelift. There's the opportunity for upgrades, but not to that same extent of a fix and flip or having to add a unit. And here's what you have upstairs. Give everybody an idea of the quality of the home as it stands today. And we have assessed this home and believe that for a capital investment of approximately $50,000, we could garner rents closer to $3,600 in total amongst the two units. And this starts to be a really interesting positive cash flow generating almost 7% cap rate asset, quite compelling in this environment.
Yes. And so we could actually, Michelle, we could actually go right now. So let's say somebody wanted to buy this property. What's the process?
Reaching out to your REWL coach first and foremost, which would then work with Compass behind the scenes. And we have a very efficient bidding process to actively bid on the home. And one thing that's really important to note here, when you're looking at buying something that starts with calling all investors or something that is very clearly oriented for income, as opposed to what could be a single family dwelling where a family could be living there today. This is a 2-unit home rental property in Ontario. Could spend all evening talking about the Ontario rent control regime. I promise I won't. But one thing that's important to note, if a renter is already in a property, you are allowed to increase rents in accordance with what are called the guideline increases, which are set by the Ontario government. But we have in Ontario what's called vacancy decontrol. So if the unit becomes vacant or the unit is vacant today, landlords have the ability to get the highest rent that the market can garner. So if you're looking at a property like this, and it already happened to be rented, and let's say instead of $3,600, you had the lower unit rented for $1,000, the upper rented for $1,500, $2,500, you might be able to get $3,600 eventually when those tenants move out and you have the potential to increase rents, but you won't generate that cash flow today. So it's really important to note here that these units are both vacant, with both units being vacant. And we also have strategies to protect buyers within agreements of purchase of sales to include closing conditional upon what's called vacant possession, to ensure that you're not in a position where you don't have the ability to fix up the home and to bring somebody in at that higher rent to generate that cash flow.
Perfect. Thank you, Shale. Gary, I have a quick question for you. I know that financing, I don't want to ask you the same question on this one. What I'm really more interested in is that in a BRRRR strategy, here's the nervousness that some investors feel. If I put the money into it, I renovate it, and then I go to refinance it, where are rates going to be and what's going to happen? And so I have my ideas on it, but I would love to hear what your thoughts are, seeing that you're in it every day.
Yeah, I'm happy to help. I mean, look, none of us have a crystal ball, but what I can tell you is, based on the current environment, this is a great property that Shale's found, and because with as little as $100,000 down, your mortgage payments could be as low as about $2,400 to $2,600 a month. So with the rental income that's expected, I mean, you're going to be cash flow positive, taking into account property taxes. I think what we're seeing, and what kind of the prediction is that rates are going to be somewhat stagnant, and we should start seeing hopefully cuts around middle of next year, maybe the beginning of Q3. That's the tentative timeline.
Right.
We're not expecting cuts to be drastic. So we went from drastically low rates when COVID hit to drastically increased rates over the last 12 months. To deal with this inflation issue. I think as rates start to come down, they'll be in a gradual process. So again, cuts expected for kind of mid next year in a gradual basis, maybe 25 basis points at a time. But what's unique about a property like this is you're going to be cash flow positive potentially day one. So as rates start to come down, that cash flow positive number just will go up in addition to the appreciation of the property, right? Because as rates come down, typically prices go up because more people can afford. So this could be really a great opportunity to jump into today, where you have double upside, not just making more money from cash flow on the rate, but also appreciation in the property value as time goes on.
Absolutely. And buying the property vacant is a huge benefit. Gary, Shale, thank you very much for showing up today and walking us through the platform. And I am just Ken, I want to bring you in on this conversation here.
Yeah, absolutely.
I like to take some questions from our room, but there's two things that I like to do. One is, how do people engage with us as REWL and through us to this to AIR? How do they get access to AIR? That's one question. Secondly, there might be people in our space here today that have some questions that I'd love to give them a chance to air those questions. Pun not intended.
Yeah, absolutely. As I mentioned before, I'll put up a couple slides before we close out, but I just wanted to give people a little more than what we promised. I'd love to see if Gary can touch on the market a little bit, and perhaps give us a little bit of inside look on how his AI actually works, and how his processes and systems, really quick, and then we'll let you guys go. But I think that'll be of value to understand how it all works on the 812 side of things. You guys okay with that if we do it for another 5 minutes or so? And then I'll answer those questions as far as, how do people get in touch with us, and then we'll do a quick Q&A for the last 5 minutes. I know we're running a little bit on time, but Gary, take it away, my friend.
Yeah, great. Thank you so much, Ken. So look, there's if you survey the mortgage product, across Canada, yeah, you're looking at about 7,000 different mortgage products available, based on areas, locations, policies, guidelines. So what we've really done is we've taken all that information and we've centralized it into an integrated platform. We then, have been working with our data science team through AI and ML to start really providing, just like the Confidence platform, start providing predictive recommendations based on a customer's unique financial profile, and so that we know exactly what the best product is. Again, sometimes the best product is not the best rate, and that's where I think people make a mistake. So figuring what the best product is, and then having the system guide us and the clients through that workflow to get them to the finish line very quickly and very efficiently. Because I think we'd all agree that in the real estate game, when you find these kinds of diamonds, speed wins, right? So we want to make sure we can go as quickly as needed to allow you to secure that opportunity. And we built our system to be a very partnership friendly platform. So we partner with incredible companies like Confidence, REWL, to provide a very quick solution, no code, very rapid launch base to ensure success. And our success is, again, underwriting, matching, serving the entire landscape. We offer over a 95% approval efficiency rate. So we know when we say you're good, you're good, right? I think that's again a bigger challenge that today's market is. The bank tell you you're good, but then you're not good. So we want to make sure you shop in confidence, no pun intended, and that you're going to get that transaction closed, and we're going to be able to deliver on that so that, you know, you can win that bid and start benefiting from you know, the searches that you find through the REWL platform. Just going back to the market, ladies and gentlemen, we have a massive housing shortage in Canada. We're 3.5 million units undersupplied just until the end of this decade. And immigration is obviously skyrocketing. So we didn't have enough housing to go around for Canadians over the last several years. Builders have started decreasing their output. So builders on any given year, the max they were kind of putting out were about 280,000 new units. That's been gradually dropping. To last year was actually as low as 210,000. So, you know, a lot of people, not a lot of housing. And what we're finding is the cost to rent today is almost the same price as it is to have a mortgage, right? So if you're seeing investment opportunities, especially ones that you know, Shale and the team have highlighted for you today, you know, we all know that historically you're always going to make money through real estate. And I think there's a lot of great opportunities to capitalize on that, because it's only a matter of time before rates do start to come down and people are going to be jumping in to try to own a home, which we all know is the Canadian dream. Back to you, Ken.
Wonderful. Okay, great. Good. Yeah, okay, we're going to get into some questions quickly. I'm going to leave you guys with a couple other slides. Just let me share my screen here quickly. So to be a little more of value, I just want to give you some time-saving tips and tricks, okay? You saw how they did stuff there. It blows my mind how easy it actually works. So use the filters, it speeds up the loading time, okay? You can disable some of the actual listings so that you can create your filters. It gets a lot faster when you do it that way. You can sort by the cash flow. I use that as a good indicator. Again, you can always go into the calculator after and change your parameters based on your mortgage fundamentals there. And then use the layers and investments, just like I showed you. Drill down to the data that's most important to you, okay? Real-time market trends. Shale showed you how to do that. Again, you'll get a copy of this presentation. You'll get a copy of this recording, so you guys can do that. And then pre-filter by strategies. You can actually save a lot of the time and just click on the buttons at the top. Nice and easy. And then once you're in there, again, use the investment calculator. That's part of the, this is the MLS analysis part when you get into the property that you're looking at. What you could do is, again, go through the calculator, run your numbers, you know, there's sliders there. You can change all the parameters. And guys, ChatGPT is in there. Ask it for comps, ask it for, you know, what's the economy like? What's the neighborhood like? If it can get it, it'll answer it for you. If not, connect with one of us at the REWL team and we'll get you guys going. All right, so that's already in there. So once you're inside, use it to try to break it, please. I'd love to see it. Let us know. All right. As I said, the way to get access, Niran, I'll help you answer the question. Guys can play with it right now. It's embedded on one of our sites. There's no password, no credit card required to go play with it. It is limited access, and you can see it there. realestatewealthlab.com/air. If you want to full access to it, you get access to it for 3 days. Real Estate Wealth Lab /trial. Again, that gives you the full membership, you know, coaching calls, playbooks, courseware, etc. What we promised is going to be sent to you. As I said, we're going to send you 3 those vetted properties that Shell actually gave you. You're going to get the due diligence reports emailed to you in a PDF with a clickable link. You will need internet access to access the links. They're live links. It'll take you right to the DDR. And again, you can read through that. And if you have any questions on it, just email us. Okay, info@realestatewealthlab.com. And again, if you're interested in using Confidence as their realtor or the brokerage to transact, they have an automated system. Guys, we haven't even touched on that, how automated they've made the purchasing process. I mean, Shell, you could just nod your head how many, you guys are bidding up to 100 properties a day using that system. So that's a call for another time. Guys, I know we're about to hit the 8:30 mark. Are you guys good if we extend the call for like another 5 minutes to answer some questions quickly? Just a thumbs up. Great. Okay, if you guys want to get in touch with 812, just visit realestatewealthlab.com/financing, fill out the little form there, and someone from his team will get in touch with you. And it's a white glove service, guys. They take you all the way through. It's a really, really neat service. So get in touch with them. All right. let's open up the call for some questions. If you guys will have any questions, just raise your hand, use Zoom to
Put your hand up.
put your hand up, and we'll bring you in the call. You guys can ask the questions live.
And we had a question in the comment section from Maureen R about getting a construction mortgage with prefabricated homes. So yeah, definitely doable, Maureen. Please reach out to us through the link that Ken just suggested, the financing link, realestatewealthlab.com/financing. We've done many deals for construction for prefabricated homes. A little bit more criteria to discuss. Is it lease land? Do you own the land? How quickly can they assemble? But we can definitely do it, and be happy to talk to you offline on how to get it done.
Wonderful, wonderful.
Thank you.
All right, I'm going to bring in Denise and Stuart with the red coat. Denise, go ahead. That should unmute you.
There we go. Oh. There we go. Hey, folks. How are you doing today this evening? It's nice to see you guys again.
You too, Denise.
Just wanted to ask, because there are people here from all across the country. Where is this system available right now for doing this analysis?
All right, Shale, I'll put you on the spotlight, my friend.
Yeah, absolutely. So today, the data and the tech and our brokerage capabilities are available within the GTA and across the GTA out to Ottawa. We're in active development of unlocking Ottawa within the next month or two, and we're also hopeful that Alberta will become available by the end of the year. That's our current roadmap, and then BC will be the next market beyond that.
So when you say you reach all the way to Ottawa, does that mean you get into Gatineau because it's so close and a lot of people just do both, or is that just right up to sort of the Ontario border? Right up to just before Ottawa today. It's based off of specific real estate boards. So Ottawa has its own independent real estate board, including the Gatineau area. So we're just before that, just to the west. Okay, thank you. Thank you.
All right, Havan, let's bring you in. We're going to ask you to unmute. All right, you're on.
Yeah, can you hear me?
Yeah, absolutely.
Okay, thanks. It's a very good presentation, but I jumped in the middle. I think I missed some good snippets in the beginning. I'm just one question I have is this tool for fix and flip investors, those comparables. Does the tool provide any rehab cost needed to reach the comparable cost, something like that, based on the house we select?
So that's a really important part of the equation. That's something that we perform behind the scenes. We actually have a SKU listing of specific appliance as an example. We look at the square footage for flooring, for painting. That's all done behind the scenes and included in the due diligence report. The self-serve tool has the ability to play around with internal assumptions. But the REWL coaches and supported by Confidence go really deep into that input into the equation.
Excellent. Havan, if you have any other further questions, just email us. We'd like to get a couple of others in and then end the call within the next 2 to 3 minutes. So thank you so much for coming on. Maureen? Maureen, can you hear me?
The two of us need to stop trying to unmute me because that didn't work. Sorry about that. 2 quick questions. Shale, one, you said that, okay, Alberta's there, and then next year you're going to be working on BC. Does that mean just the GVA, or does that mean all of BC?
To be determined.
Okay.
But we're going to go into the largest markets first, where we think the most transactions will be. But it's also demand driven. So if you have specific areas that would be of interest to you, please provide that feedback to REWL. That's really supportive for us to prioritize our development pipeline.
Okay, great. And when it comes to the pricing and the accessibility, I'm a little bit confused on that, Ken. So if you are a full-fledged member of REWL right now, you have access to the whole tool, but if I request a DDR, that's an extra expense?
Correct. So what Confidence is doing is they've allocated 1 free DDR with every new trial membership.
Okay.
After that, the DDRs do have a fee associated with it because it is a heavy lifting item. You're having 2 or 3 individuals, experts, review the AI analysis and providing you all the expertise that they have to give you something that you can actually act on. So it's almost like having 2 or 3 realtors and an analyst, review your numbers for you. So you're getting an actual B review to make sure that this is something that should be seriously considering.
Great. No, that makes sense. Thank you very much.
No problem. And as a member, like I said, the air is included with it, along with the other calls that you have and everything else. So, I mean, it's to me, it's a no-brainer, guys.
Yep, I've been happy the last year and a half.
Awesome. Good to see you, Maureen. All
Thanks,
right,
Maureen.
guys, I know we're over time. How are you guys doing for time? Can I answer the last 2 questions and then we'll end the call? You guys good? Excellent. All right, Armin, I'm going to bring you in. Armin, I've asked you to unmute.
Hi. Sorry, I joined late, so I apologize if I'm asking you guys to repeat yourself. And I have a little bit of understanding in here. I don't know exactly what you guys do, but so my understanding is you only get involved in financing, right? So for example, if I have a house and if I want to rebuild it, you guys help me with the construction loan and all those things, or you get hands-on for the construction itself as well?
Yeah.
So Gary, I'll pass that question to you, and then you can leave it over here if you want after.
Yeah. So the answer is yes, Armin. We do it all. So you can definitely reach out to us. We can handle the entire construction financing needs. But I think, Ken, you probably have some to add as far as what you do.
Yeah, we have contacts in the field, Armin. So if you're looking for people to do construction, renovation, project management, yeah, reach out to us on that. But I would suggest to get in touch with Gary, get your construction financing in place, have a plan set up, and then if you need an execution team after that, we'll be able the ones to take over the ball at that point.
So Armin, I'm going to go ahead and assume here that what part of your question has not been answered, and that is that who are we and what do we do? Real Estate Wealth Lab is a boutique group of people, all investors put together. We provide education, we provide investments, not investment, but we provide education, and we're all investors, and we provide coaching and mentorship. We also have skilled partnerships with highly skilled individuals on our leadership team. Gary is one of those partners. Shale is one of those partners. And so what you have when you come into our environment, you get all of us, and you get access to air, which gives you a huge leg up, and you get access to Gary for financing. I think that answers the totality of that question.
Excellent. Armin, if you have any other questions, please reach out to us. I'd like to get to the last couple, and then we'll close off and let you guys get out on your Thursday night. Giselle, come on in.
Hi, thanks a lot for answering me. Thank you so much for sharing everything too. It's been really interesting and exciting. Okay, so my question was, at this time, you're just offering access to single-family detached homes, correct?
Correct. The property does analyze other properties on there. However, the primary purpose of it is for single family, but there are others on there that it will analyze, but it might not have comparables for it because of the type of property that it is. Shale, am I correct in answering that question that way?
That's been the primary focus to date. We can also support if there's interest in a condo investment property or a duplex or multiplex. We can support that as well, but the primary focus to date has been single family homes.
Okay. Sorry, the second part. Are you planning to get into that a little bit more? Like condos and duplexes, other items like that.
Yeah, we are, but there are pretty strong capabilities today. If you did have specific interest in a multiplex or a condo, I suspect we could support what you needed today.
Great, thank you so much.
Yeah,
thank you.
Real quick, just to add on that, Giselle, there is a condo button on there. So if you toggle between, detached and condos, the condos will come up. Guys, there's too much to show you. I mean, let's just be realistic, right? There's so much that we can go through. But yeah, that's why it's important to get in touch with us, connect with us at REWL, and we'll walk you through it, answer questions personalized to you and your situation. Sound good?
Thank you.
Excellent. Thanks, Giselle. All right, Niran, we're good, guys.
Well,
We're 10 minutes over.
Thank you very much, everyone, for joining us today, and a big thank you to Shale and Gary for stepping in and providing immense amount of content. And ladies and gentlemen, I don't know whether you realize this or not, but these guys are heavy hitters, and we've been sitting in a living room, so to speak, with them. So, and they bring to the table not just their own prowess, but a whole wealth of knowledge behind them that has partnered up with AI, partnered with us, and we're really, really looking forward to serving you and helping you build your investment portfolio. We are investors primarily, and we're here to help you build your portfolio. So please reach out to us. Once again, there's two ways for you to connect to AIR. You can go, maybe can just as a good, throw up that one slide one more time of how they can connect with us. We've got, if you want just to be a do-it-yourself and you want to go look at it, then you can do that. And I believe it's realestatewealthlab.com/AIR. There it is. Take a shot of this, and that will give you access, limited access to AIR, but it'll allow you to see what's there. Or for action takers and you want to really move ahead and buy the property, then become a member, a REWL member. It's 3 days free trial, and in those 3 days you have unlimited access to the AIR platform. After that, our membership kicks in. It's $99 US funds. It's because we are a company that is also US based and we're expanding into the US, so that's the reason for that. But $99, and that gives you access to not just AIR, but to all of us as coaches. It gives you access to our playbooks, our calls that we do throughout the month, our mentorship. So I am really, really looking forward to, if I've met most of you, a number of you are already members, and a number of you I don't know. We are really looking forward to meeting you and shaking your hand. Have a great night.
Excellent. Thanks, guys. Cheers.
Bye, everybody.